Hey guys, I hope you're all doing well. So today I'm going to talk you through three penny stock investments, of which I have exposure to some, that I believe are poised for long-term growth and have huge upside. Okay, and at least two of these at least are involved in disruptive technologies that I believe are definitely be very well poised to take advantage of the shortcomings of the coming decade, right? So the first one here is H2O innovation. And as we can see, it's right now $130 million market cap. So again, very much a penny stock, trading at $1.70 Canadian. And I just bought a couple shares this past week. And I mean, over the past 6 months, it has increased in value by over 100%, as we can see here. But I still believe this is a company that will definitely grow years into the future. As I mean, water scarcity is becoming more and more of a problem, right? So of course, it's a publicly traded company listed on the Toronto, Alternex, and over-the-counter stock exchanges, and it specializes in innovative technologies for water filtration, wastewater treatment, and water reuse. So their mission is to provide integrated solutions combining system delivery, specialty products, as well as operation and maintenance, which is pretty much their three core pillars of their business specified here, right? So water technologies and services. So it designs and provides custom-built water and wastewater treatment systems using membrane filtration, as well as digital solutions to monitor a water treatment plant. All right. It offers a complete line of maple equipment and products, specialty chemicals, consumables, and specialized products. And it maintains, repairs, and operates water and wastewater treatment infrastructure, right? So, when we think of the problems coming into the future, we think of water scarcity, right? So right now, around like 1.1 billion people worldwide lack access to water, and a total of 2.7 billion find water scarce for at least 1 month of the year. Okay, and this problem is just gonna increase into the future, right? So projections by 2050, they're saying that more than 5 billion people could suffer water shortages by 2050 due to combination of like climate change, increased demand, and polluted supplies, right? So something like a wastewater treatment plant and desalination plant are going to be key going into the future, right? So although I think this stock has had such a huge run up, I do still think that it has more of a run up to go, especially 5 to 10 years down the line, right? And if we look at some of their stats, or at least their earnings, as we can see, they've been unprofitable for 3Q 2019, 4Q 2019, but they have been growing earnings steadily. And it's surprising to see that they actually have been able to have positive earnings, like almost 813,000, despite the whole pandemic hitting, right? And if we look at the annual reports, of course, it's nice to see that their revenue growth is pretty crazy and steadily increasing even through to 2020 at 133.6 million, although they lost $4 million. However, I do like to see this trend that they actually were profitable in second quarter of 2020, right? So again, they're spending a lot of money on research and innovation, and they're putting a lot of money back into the company. But I do like how, at least from an earnings perspective, they finally were positive this past quarter, right? And if we go on the analysis side right here, they are expected to grow, at least the current quarter, 12%. And the current year 10%, and however they're expected to decrease that growth into next year in 2022 by 3.6%. However, I do think that with only 4 analysts covering this may be a biased estimate, and I also think that they will be able to grow more than just 3.6% in 2022, right? So I do think they have very, very good growth potential, right? So this is definitely a stock that I think will be poised to take advantage of and provide solutions to the incoming, water scarcity that will affect pretty much the world as a whole, right? So the next stock right here is a stock that I like because if we look at, the monthly chart, it's a stock that peaked above like $55, and now, from that time is trading down 44%. It's a stock that recently did sort of a backside acquisition via SPAC to enter into to be traded on the New York Stock Exchange called Hyliion. And pretty much this is an EV play. And as we'll see, it sort of provides integrated powertrains for EV and hybrid trucks. And a lot of people don't like the stock because it caters towards more like a hybrid solution instead of just a fully EV solution. However, I do think that with the current rundown of the stock now trading, although it's not like a penny stock trading at $30, it does have penny stock valuation at only 865 million of a market cap, right? So I do think that I will hopefully be starting to acquire some shares, especially since it has decreased tremendously in the past month. And I think the reason for this is after the acquisition and after I started trading on the New York Stock Exchange, a lot of investors sort of took their profits out of the stock, and now it's coming down to more realistic valuations, right? So I see it as definitely a more attractive buy since it's sort of come down more to earth, and now investors can sort of re-enter this market, and it has a lot of growth potential, even though that it hasn't seen that in revenue just yet, but its projections are exciting, as explained in this pretty nice article by Patrick McLaughlin. So, of course, is a 2020 EV spectacle, and that would be an understatement. What started as a hype behind SPAC shell is mutating into EV truck fever for Hyliion. So pretty much it's because Hyliion posted a monstrous 425% share price growth in 3 months, which is absolutely ridiculous. So it's nice to see that it's come down by, around 40%, right? And as you can see, the 6-month chart is still up by close to 200%, but I do think that it has a lot of room to grow, especially coming into the future, right? So, some projections here by analysts, they're relatively bullish on Hyliion come 2021 and beyond. So wallet investors forecast Hyliion to reach $112 and $717 in 2021 and 2025 respectively, which would translate into 278% and 2,313% gain respectively based on the current price. Because this was written on October 11th, okay? So their product pipeline is different. If we look at this paragraph here, is different from EV truck competitors Tesla and Nikola. Nikola, who knows if they're going to be around much longer, but so first, the latter companies intend to build their EV trucks from the ground up. Contrast that to Hyliion's retrofit business model, where they make the powertrain engine for fleets to incorporate into pre-built trucks. Okay, so that's an important distinction there. Hyliion's 2 main products include the hybrid electric drivetrain and the hybrid truck ERX solution. The production distinctions allow Hyliion products to capture a unique segment in the market. So Tesla, for example, is targeting an everyday consumer like Henry Ford. So in contrast, Hyliion is serving the fleet market such as JB Hans, Amazon, and UPS. Right, so more industrial play here. Not to mention that Hyliion is traveling down the renewable natural gas route. So bullish investors think that Hyliion's unique product offering means that they'll be growing a market share come 2021 and beyond. So, of course, let's talk about their profitability. And, of course, they have, the red flags of every startup pretty much: unprofitability, negative operating cash flow, and insignificant revenue. The projections are showing strong bullish signs. And sort of fast-growing EV companies burn through cash like crazy, right? So Hyliion forecasts revenue of $344 million in 2022, $1 billion in 2023, and over $2 billion in 2024, right? So of course these are just projections, and Hyliion expects Hyliion expects EBITDA earnings to grow from $8 million in 2022 to $602 million by 2024. So of course this suggests that this strong revenue growth suggests Hyliion is well positioned to receive price-sensitive contracts, orders, and capitalize on the growing EV industry. Right, and of course, the EV industry is absolutely booming right now. There's so much hype on it, and I do believe that a lot of this hype was priced into Hyliion stock, but because of this decrease in the stock price by around like 30 to 40% over the past month, I think it is maybe time to put some money and capital into this stock. So, however, of course, we must remember that Hyliion's financial estimates are just that. They're just estimates, right? And so I will be getting into this more in future videos, but I do think that now is a time to look at stock like Hyliion, right? And finally, the last one is not in sort of any exciting industry. I just think that it is at the end of their cycle, and we're going to be talking about, of course, a tanker stock. And I myself own NAT, Nordic American Tankers, but I do believe right now, at the current position that we're in, that Frontline has a more diverse set of fleets. So it doesn't just have Suezmax vessels, but it has VLCC vessels as well, and other tankers that are supposed to take advantage of the sort of decreased valuation of the stock price, right? So this is a stock that, in January was like $13, and it has decreased by over 48% since then. And I do believe that this is nearing the bottom of the market, and the price will just increase coming, especially into the winter months, right? And if we look at the valuation, definitely a penny stock. I would say anything under 2 billion is considered a penny stock. So we can see here 1.3 billion market cap. And this right here is just incredible to me right now. Of course, tanker stocks in general earned a tremendous amount of money due to the pandemic, because a lot of oil was still produced, and so that oil had to be stored on tankers as sort of like a floating storage. So that meant because there was not enough of supply of these ships, and it takes around like 2 years to actually build a ship and deliver it from the shipyard to these shipping or oil tanker shipping companies. There was a lot of gas that needed to be stored, and pretty much these tanker companies charged exorbitant rates. So right now, this is why the PE ratio for Frontline is sitting only at like a 3, when all the other industries or the market as a whole, their average PE ratio is like a 25 right now, right? So, and right now, if we look at their forward dividend yield, it's like 29%, which I believe obviously is going to come down as they're starting to earn less and less money because of, first of all, the spot rates for tankers are steadily decreasing, and that's definitely impacting their share price. However, it is a very cyclical market, right? And this special report by Euronav is a very, very interesting paragraph right here. So tanker shipping is a highly cyclical business. Let me just see if I can. Yeah, highly cyclical business with freight rates driven by numerous factors. But in the medium to long term, vessel supply and demand are the main drivers, right? So vessel supply is one factor controlled by the shipping industry, and the supply of vessels is impacted largely by capital flows into and out of the sector, but also availability of financing from banks and other investors. So a tanker market cycle generally begins with an oversupplied market where too many ships depress any earnings, and therefore the capital flows out of the sector. This will cause some owners to get rid of their older ships as these become uneconomical to run. As vessels are removed, the market will become rebalanced, owners will start earning more profits and more capital. This encourages owners to start ordering new tonnage, although the lead time on delivery is at least 2 years, right? Of course, it takes around 2 years for ships to be delivered. Once these newly contracted vessels start delivering to the market, it will slowly once again become oversupplied, and earnings will hit another trough. We are back where the cycle started. So these cycles are of varying duration, but generally take 5 to 10 years to complete. But like seasonality, do appear to be more variable in length. So of course, for one, these markets are highly cyclical, as it can be depicted here. And right now, the order books for new VLCC and Suezmax vessels are as depressed as they have been in like the past 10 to 15 years, right? So, I mean, there's not a lot of new vessels coming into the market, right? So that will mean over the coming years, there will be a drastic reduction in the amount of vessels that are out there, which means the existing vessels will be able to charge more, right? Because it operates on a supply and demand type business, right? And it's a demand and supply and demand type industry in general, right? So as we can see here, 1-year time charter rates, they were kind of high, well, kind of mediocre in coming into 2000, dipped below coming into the 2000 again, went up high again in 2001, 2002. Dipped again in 2003, and then 2004 experienced again like a pretty nice high. Lasted like, I don't know, 6 or 7 years, and then from 2009 to 2013, so again like around 5 years there, the cycle was downtrending, and tankers weren't earning a lot of money, but then again started to uptrend in around like 2014 to 2016, right? So this just goes to show that these markets are very cyclical, and I believe in the position that we are now with something like Frontline stock, which is in the tanker shipping industry, has been decently profitable in the coming years and has been sitting around like, as we can see in the 5-year chart, it was like $15 in 2015, and right now representing like $6.7 as it's trading right now. I do believe that it has a lot of potential for growth, and although the shipping industry in general is diminishing just because of all the environmental pressures and decreased demand for oil, I do think it will rebound, and this industry will rebound at least like once or twice more before, the shipping industry will become obsolete and non-existent, right? Due to the move away from oil, right? So because of the cyclicality of this market, I do believe that this will continue to be uptrending into the winter months. Again, as we can see here, generally historically, these are the average monthly VLCC rates, which VLCCs hold 2 million barrels of oil. As we can see, of course, during like spring and summer, they tend to be their lowest, and coming into the fall and winter, VLCC rates tend to be at their highest, right? So we can see coming into the winter, hopefully, we will hopefully see a share price appreciation of Frontline and other tanker stocks like NAT. So anyways, those are my 3 penny stock picks for this upcoming week and even the coming months. And I own positions of H2O Innovation. I do not own any positions in Hyliion stock, but I will be looking to increase my position if this stock drops even further. And although I do not own Frontline, I do not plan on purchasing any shares. I do have exposure through NAT, and I do think that the share price will rebound in a couple of months, or even in a year or two, as the cyclicality of the market bounces back up, right? So let me know what you think of all these stock picks. Thank you for sticking with it, and if you enjoyed this video, please remember to give it a like and subscribe, and I hope you guys all have a fantastic day. Thank you for watching.